Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com with a Forex quick look at the dollar versus Canada. We have our interest rate decision coming up at 9:45 a.m. What will that do to the price of the dollar versus Canada? Well, I don't know, but we'll take a look at the technicals that would give either a more bullish or bearish bias after the rate decision. So let's get started. The expectations are for no change from the Bank of Canada, but the market is pricing in a June cut, and we'll listen to any sort of comments from the statement in regard to that idea, and that will be the focus for the traders in this currency pair. We are seeing the dollar versus Canada technically moving higher, which the dollar moving higher, the Canadian dollar moving lower, maybe in anticipation of that June cut. U.S. Interest rate cuts are sort of being pushed out a little bit, potentially to things like July, and that may be a catalyst for the technical move to the upside. But as you can see, the price action over the last week or so has been fairly contained. But what we can say is that containment is above this blue line right here. This blue line represents the 100-day moving average. And so staying above that level is more bullish. Also in play is a 50% retracement of the move down from this high to this low. That low comes in at 1.35378. So combination of those two technical levels, 50% retracement, 100-day moving average, pips apart, is going to be the key barometer for traders into the rate decision. If the price were to move below those levels, then the bias would tilt more to the downside, getting below the 100-bar moving average on the 4-hour chart at this level right here is also an indication of further downside tilt for this pair. And then we look toward the 200-bar moving averages, with the 200-bar moving average of the 4-hour chart at 134.92, the 200-day moving average at 134.79. That would be on a more hawkish Bank of Canada rate decision, which is somewhat not expected, but who knows? There's a lot of stuff going on today as well, including Fed Powell's talk on Capitol Hill, which could have an influence on the U.S. dollar as opposed to the Canadian dollar. So be aware of these levels from both the Bank of Canada rate decision and the chairman's comments on Capitol Hill. Now, on the top side, what do we have in play? Well, we have these two highs from last week and this week, forming this ceiling here at the 136.05 level. Get above that level, and we'll start to look toward the 61.8% retracement of the same move down from this high right here to this low right here. That level comes in at 1.3623. It also is near the high of a swing area going back in time through September, October, November, and December, I guess, before the market started to use that level as a resistance here and finally gave up and pushed to the downside. We haven't been up to that level yet, approaching it. So getting above that level and getting above the 61.8% retracement would open the door for further upside. So this is resistance up here. This is a support down here to start things off, break either to the upside or to the downside through here, and it opens the door for further momentum in the direction of the break. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.